Yo guys, it's John here with Option Lab. All right, so if you're currently working a job and say you're making, I don't know, 5, 10, 20K a month even, you're doing pretty well for yourself, but you want to bring it to that next level. I'm talking an extra 3, 5, 10K per month that could get you something like your dream car, some extra spending money, or even just pay your rent. I've got some sauce for you in this video. And the best part, it's only going to require about 30 minutes of your time per week. And if you stay till the end of this video, I'll make it short and sweet. You'll see how to start implementing it in your account immediately. So for this video, I assume you saw the thumbnail and title. I'm going to use my M4 competition as the bar to set, which let's say that costs about $1,500 a month. Now, guys, come on. Obviously, I paid cash for mine, but for the sake of this video, let's set a realistic goal of making an extra $1,500 a month to start. So that'll equate to roughly $375 profit per week, which is super easy if you just follow what I'm about to say. In fact, it's so easy that the strategies I'm about to explain made me over $2 million profit in 2024 with all my trades tracked live and publicly for you guys. So you can click the link in the description, visit theoptionlab.com to check out all that stuff. I've helped literally hundreds of people print money with option selling strategies. But anyway, let's dive into the iron condor strategy that got me my M4 competition. All right, we are live on the whiteboard, and today's topic is going to be what I'm calling the high IV condor. I'm going to break down the 4 steps to entering this trade, make it super simple for you guys to understand so you feel comfortable implementing it in your own account. I'm going to go through step by step, as well as I'm going to break the condor into its 2 component parts, which would be the bull put spread and the bear call spread. And what I'm going to do is, with each of these steps, I'm going to actually implement them in real time on a stock and a chart so you guys can actually see what this looks like. All right, so let's get into it. So the first step is going to be finding high IV volatile stocks. So why would that be? So if you guys are familiar with option selling, you know that when IV or implied volatility is high, option premium is going to be higher, which means it's better to be a net seller. So what we're going to do is we're going to scan for high IV volatile stocks, things that have had maybe recent or upcoming earnings or news or just overall volatile names that move up and down a lot. Step 2 is going to be selling a 20 delta bull put spread on down days. Now, that's a lot of gibberish in one line there. So if you aren't familiar with option selling and this is completely new to you, I would suggest hopping in to Option Lab and downloading my option selling cheat sheet. You can also book a 30-minute call with me on my website, theoptionlab.com. I've talked to probably 10 of you guys this week, and you guys have been seeing some good success. So if you do need help, download the cheat sheet. But anyhow, let's get into what a 20 delta bull put spread actually is. So a 20 delta bull put spread will look like this. So I'm going to say we have a stock here, and let's say the stock is currently at 100. So the first step of a bull put spread is going to be selling to open a put. So that's going to look something like this. -1 of the 90 put, right? And we're selling an out of the money bull put spread. So in other words, the strike price here is going to be lower than where the stock is currently at. So for doing that, we are going to receive a premium, right? And that's going to be, this is actually going to be entered as one trade. But then what we're going to do also to create this into the bull put spread is buy, say, the 85 put below, right? So that's going to cost me money. So I'm going to receive out of this a net credit for entering that trade, right? So that's money to my pocket. And the only criteria for this being profitable is that the stock stays by expiration above my top strike price, which in this case is 90, right? So why are we selling this on a down day? The reason we're selling this on a down day is because we're kind of taking a contrarian point of view. If we have a stock like MSTR, which has crazy swings in each direction, if we time, didn't want to erase that. If we time entering this trade on a massive down spike where we're expecting some sort of recovery, we're now placing ourselves even lower than where the stock's already dropped. We're going to get paid for that, and we're about to do that on the other side too. So for this trade, I'm going to say we've profited $200, right? And this is a limited risk, limited reward trade since it's a spread. So next what we're going to do, and this is going to create what we call a condor, is we're going to sell a 20 delta bear call spread on an up day. So these are the same thing, just flipped upside down. So if you look here, we're going to take, say we have MSTR here. We're now in the bull put spread, and now MSTR has a massive spike. What we're going to do is we're going to sell a bear call spread. So again, think of this like the sandwich. The inside leg is going to be the one we're selling. So -1, and let's say this is the 120 call. And let's just say the stock is now trading here at 110. Okay. So the stock's now rallied up to 110, and now we're selling to open the 120 call. We receive a credit, and in that same trade, we're going to be buying the 125 call. And for that, we're going to have to pay out a debit. But for this trade, again, we're going to receive a credit for opening it. So what is our area to make money here? That's, how do we make money on this trade, right? So for this one, we said that the stock has to stay above 90. And for this one, we're flipping that upside down. We're saying the stock needs to stay below 120, which is that strike. So we actually create an iron condor here where the area for profit is essentially right here, right? It has to stay below 120 and above 90. So anywhere in this sandwich, we make money by expiration. So you can see the stock can move all over the place. We're not betting direction, none of that nonsense. This is a super good trade because most likely if it has an extreme move in one direction, we're going to see a recovery move back. And that's when we're going to take advantage and strike with these two types of spreads that are then going to create an iron condor. So there's our $400 per week. Now, what about things like days till expiration? What expiration are we choosing? So typically, I'm looking at 7 to 14 DTE, and this is to avoid extended exposure to volatile stocks, right? So in this strategy, we don't really want to have a lot of time because MSTR, for example, can move massively in either direction. So shrinking the time frame in which a potential move like that could happen is a positive. So number 4 is going to be creating a watch list of stocks you can regularly perform this strategy on. That's going to be the 30 minutes a week. Monitoring to see, are any of the names that I've created on this watch list fit for this strategy this week. Now, in Option Lab, I have a Bloomberg terminal, so I have a ton of scanners and material. So if you guys are not yet in there, book a call with me to join. I'm taking a few more spots this week. You can book it right there, theoptionlab.com, but we have a ton of resources in there, as well as weekly scanners that I post that show you guys the best stocks to implement for this strategy, the high IV condor. Anyway, I hope this was helpful, and I'll see you guys in the next one.